Evet arkadaşlar, kimler var bugün bizle birlikte? Kimler? Ay ay. Hepsi bir trendde duruyor şu anda. 22-12. Hepsi yükseldi abi. Hepsi. Evet. Kimler bizlerle? Şu an çok güzel pump yiyor. Kripto Abdullah batıyor. Gerçekten. Kripto Abdullah'ın batışını izliyoruz. Hepsi sonda abi. Evet, düşmüyor. Arkadaşlar crash dedik ama belki de yukarı doğru bir crash var yani. Yani 15 dakika var toplantıya. Ve Bitcoin yükseliyor. Her yer yeşil oldu. Evet, tekrar geri düşüşüne devam ediyor. Sanırım bir şey yaptı. Bir ivme kazandırdı diğer coinlere. Büyüttü onları bir. Çünkü yere düşürmek için büyütmek daha fazla zarar verir onlara. Şu an öyle bir şey yapıyor olabilir. Hareketler büyümeye başladı. Amına koyayım ya. Burada işlem yapacaksan düşüreceksin abi. Kafana göre değil. Kafana göre değil. Yani çok güzel bir mum verdi. Bilmiyorum, toplantı etkisi mi? Göreceğiz abi. Yani bu da belli oldu. Okey, gidiyorlar. Evet, yani bu aradaki ufak hareketlemeler falan filanlar Bitcoin'de artık diğer coinleri canlandırdı. Bayağı artık pump yemeye başladılar. Bekleyiş devam ediyor. Son 10 dakika. Kripto Abdullahçılar. Kimse yok değil mi? 48 binden önce 32 bine. Biraz eridiler. Önce 32 bine. Yani şu büyük hareketler, şu büyük yükselme, büyük bir düşüşün habercisi olabilir arkadaşlar. Okumaya çalışıyoruz grafikleri de, bakalım. Her şey olabilir. Buradan çıkarabilir de. ...15 dakika daha bakalım ne yapıyor. Evet. Güzel bir çıkış. Çok güzel bir iniş. İniş devam ediyor. 2 kez pump yemiş. Buradan. Yani bazı düşüş çıkışlar inişlerin habercisi abi. Burada mesela bak pump yemiş. Şurada. Bir pump yemiş. Ve sonra aşağı sürüklenmiş. Yine aynı bir durum olabilir. Aşağı sürüklenebilir coinler. Son 10 dakikamız arkadaşlar. Evet. Bir batmanın hikayesi. Nerede düşmezse batıyorum. Şu an nereye gideceği hiç belli değil. Evet. Çılgın bekleyiş devam ediyor. Şu komperleri kaldıralım hemen. Ne? Şu, evet, gördüğünüz gibi bakın bir tane vermiş, ondan sonra aşağıya gösteriyor yani. Bir fake olabilir mi? Diğerlerinin aşağı inmesi lazım tabii. $48.500 oldu mesela. Evet, son 8 dakika. Countdown. Şarkılı countdown istiyorum. Müzikli. Tabii. Kutlamalı. Direkt zamanı da biliyoruz ya. Bir de oluyormuş ha. 48.500 oldu mesela. Son 8 dakika. Countdown. Şarkılı countdown istiyorum. Müzikli. Tabii. Kutlamalı. Direkt zamanı da biliyoruz ya. Direkt zamanı da biliyoruz ya. 48.500 oldu mesela. Son 8 dakika. Countdown. Şarkılı countdown istiyorum. Müzikli. Tabii. Kutlamalı. Direkt zamanı da biliyoruz ya. Bir de oluyormuş ha. Countdown nereden bulacağız değil mi lan? Neyse müziği biz kendimiz çalalım abi. Sadece countdown. Evet. Kaç dakikamız var? Any date. Party. Date bugün. Hour. Hour ne olacak lan? Bu 30. Bu 22 mi? Tamam. 0. Evet. Stop countdown at 0. Okay. Evet, bu kadarımız var. Arkadaşlar. Ya zaten düşüyor anasını satayım, şuraya bak. Güzel bir fake attı. Eriyor mu diğerleri? Evet. Son 6 dakikamız. Abi nereye gideceği hiçbir zaman belli değil. Buradan basıp gidebilir yani tekrar. Sonuçta yani gerçekten nereye gideceği hiç belli değil yani. Ya yön aşağı doğru. Abi doğruya doğru yani konuşalım. Yön aşağı doğru yani hani. Şurada bir trend kırılmış. Anladın mı? Tabii böyle gelip böyle düşebilir yani. Ama orada bir trend kırılmış yani hani bir kerelik değmiş gerçi ama. Şimdi yeni trendimiz bu mu? Ya çizemem şimdi bunu. Evet, sonuç olarak ne oluyorlar? Ya bunu tekniken bu, ya bu zaten hani abi aslına bakarsan haftalık olarak çok tehlikeli pozisyonda yani bunlar böyle çıksa bile. Evet, o da trende vurdu. Ama düşüşleri çok fena oluyor yani. Çıkışları fena, düşüşleri fena. Büyük bir dalganın içerisindeler. Evet arkadaşlar. Kimse izlemiyor lan. Hala kimse izlemiyor. Yayınımızı. Canımız yayınımız. Oynatma sayısı 2 ama kimse izlemiyor. İzleyen varsa yazsın bir şeyler. Bence pump yediler ya hepsi. Bir pump yediler yukarı. Yani sanki yükselecekmiş gibi. Düşüşe hazırlanıyorlar diye düşünüyorum. Ama göreceğiz. Kaç dakikamız var? Parti başlıyor mu? 3 dakika. Nerede BTC? Çok fena çıkıp indi lan. 49'a falan çıktı amına koyayım. Evet 3 dakikamız var. Az önce 49'da amına koydum şeyi. Hepsi bir iğne attı tepeye. Ya tabii bu yükseliş de olabilir abi yani hani ne diye yalan söyleyelim yani. Hani yükselişin noktası da olabilir. Ama ben şöyle düşünüyorum. Bitcoin buraya kadar düşürmüşken mesela Solana için geçerli mesela. Anladın mı? Hani düşürmüş, devam eder bu. Bir düzeltme yapıp tekrar devam eder yani. Öyle gözüküyor. Gözüken o. Yani hareketler çok büyük olduğu için buradaki yükseliş bile bize çok şey gelebiliyor abi. Diyorsun ki yükseliyor mu okudum şey. Ver gazı. Ama öyle değil. Hareketler çok şey. Şu an geriye dönüyor yani. Parti de başladı herhalde. Ha? Herhalde parti başladı. Şey tarafında olaylar ne? TR'ye. Abi TR'ye yazık ya. Yazık amına koyayım ya. Siz kimsiniz? Şurada sözlü hamle yaptılar. Allah belanızı vermesin sizin ya. Yazık oğlum ya. Şunlara pek dayanacağını zannetmiyorum abi. Ondan sonra düşer. Ama bir şeyler değişmesi lazım. Yani bir şeylerin olması lazım ki düşsün amına koyayım. Evet. Bu taraf eriyip gidiyor. 1 dakika var. ...40 saniyemiz var. Ona rağmen bayağı düştü yani. Bakalım dolar yuvaya geri dönüyor mu? DX tarafına da bakmak lazım. Evet, parti başladı mı? 7 saniyemiz var. DX Bey. DX Bey 60 yukarı ya. 15 minutes. DX 60 abi. DX 60 ise yukarı Bitcoin düşecektir yani. Bunun anlamı bu arkadaşlar. Tabii. DX vurmuş yukarı. DX vurmuş. Aynı Bitcoin gibi yani hani o da vurmuş. DX'in weekly'sine bakalım. Abi DX buradan gider ya. Basar buradan. Bitcoin yükselmeye devam ediyor. DX vurmuş abi 15 dakikalıkta işte. Vurmuş yukarı yani. ...19.30. Tabi. Ama Bitcoin de yükseliyor. Evet, bir acayiplik olacak bakalım. Zaman geldi. Yok abi gidemez. Gidemez yani bu kadar düşürmüş hepsini. Bir tık daha aşağı indirecek yani. Total de fena ya. Fena para girmiş totale de. Baksana. Kırmış. Hacimli kırmış muhtemelen. Devam edecek yoluna gibi de duruyor bir taraftan. Tabii bunlar 15 dakikalık hareketler arkadaşlar. 4 saatlikte bakarsam böyle bir şey yani. Hani buradan aşağıya gitmesi çok olası yani. Baksana zaten aşağı inmiş amına koyayım yani hani. Bekleyip görmek lazım. Ama boğa mı ayı mı belli olur şimdi yani. Hani Bitcoin bence buradan diğerlerine para yedirmez abi. İndirir aşağı yani. Bir diğerlerini bir eritir. Çünkü diğerleri çok yüksek hala. Yükseldiler. Belki onların bull trap'idir bu. Kimisinin bull trap'i bu. Evet 14.30 bir şey olmadı. Yükselirse TL'ye kesinlikle dayanmaz ya. Evet bir hareketlilik yok arkadaşlar. Bitcoin'in 15 dakikalık hareketine bakalım. O da aynı şekilde buradan 46'lardan ta 49.200'lere kadar vurup geri düştü. Gider mi buradan? Hacimli çıkmış bir de bak görüyor musun? Bir boklar dönüyor da bakalım. Bak bunun gibi olabilir. Yarın hepsine bir yükselme verir. Pat diye indir aşağıya. %150'lerden 177'lere amına koyayım. Yani abi bunların hepsi çok yüksek zaten yani anladın mı? Ulan o kadar çok çizik var ki hiçbir bok gözükmüyor. Bunu ne demek bunlar acaba? Evet bayağı iyi yükseldi. Hacimli. Herkes düşüş beklerken yükselebilir yani. Ivo da artmış. Ivo. Ivo da iyi bekletmiş burada ha. Al sat, al sat. Ama işte abi bugün kritik, yarın kritik. Dolar geri yuvaya dönecek. O yüzden düşürebilirler ama tam tersi şu an oluyor. Şu anda yükseliyor. Boğa geri geldi. Evet, yükselmeye devam ediyor. Sevgili Bitcoin'imiz. Bakalım Ekşi'de ne diyorlar Bitcoin ile ilgili. Bak burada da aynı şeyi konuşuyorlar. Evet. Evet, ne oldu şimdi yani hani? Evet, faizler şey kaldı. Sabit. Evet, konuşma varmış. Canlı izleyelim bir de. Herkesin yaptığı.
Thank you, Mr. Chairman. My question is, if it's often said that monetary policy has long and variable lags, how does continuing to buy assets now, even though it's at a slower pace, address the current inflation problem? Won't the impact of today's changes not really have any impact for 6 months or a year down the road on the current inflation problem? And aren't you actually lengthening that time by continuing to buy assets such that it could be not until the long and variable lag after you end purchases sometime in March that you'll start to have any impact on the inflation problem?
So on the first part of your question, which is why not stop purchasing now, I would just say this. We've learned that in dealing with balance sheet issues, we've learned that it's best to take a careful, sort of methodical approach to make adjustments. Markets can be sensitive to it, and we thought that this was a doubling of the speed. We're basically 2 meetings away now from finishing the taper, and we thought that was the appropriate way to go. So we announced it, and that's what will happen. The question of long and variable lags is an interesting one. That's Milton Friedman's famous statement, and I do think that in this world where where the global financial markets are connected together, financial conditions can change very quickly. And my own sense is that they get into financial conditions affect the economy fairly rapidly, longer than the traditional thought of a year, 18 months, shorter than that rather.
Evet, gidiyor Bitcoin.
In addition, when we communicate about what we're going to do, the markets move immediately to that. So financial conditions are changing to reflect, the forecast that we made, and basically, which was I think fairly in line with what markets were expecting. But financial conditions don't wait to change until things actually happen. They change on the expectation of things happening. So I don't think it's a question of having to wait.
Can I just follow up, thinking about having to wait? Is it still the policy or the position of the committee that you will not raise rates until the taper is complete? Thank you.
Yes, the sense of that, of course, being that buying assets is adding accommodation, and raising rates is removing accommodation. Since we're 2 meetings away from completing the taper, assuming things go as I think if we wanted to lift off before then you would stop the taper potentially sooner, but that's not something I expect to happen. But I do not think it would be appropriate, and we don't find ourselves in a situation where we might have to while we're still purchasing assets.
Okay, let's go to Colby at the FT.
Thank you, Michelle. Chair Powell, I'm curious exactly how much distance you think there should be between the end of the taper and the first interest rate increase. Back in 2014, the guidance that was given was for the Fed funds rate to remain at the target level for a considerable time after the end of the asset purchase program. Is that an approach you support now, or does the current economic situation warrant something a bit different? Thank you.
So we haven't made any decision of that nature, and so no, I wouldn't say that's our position at all. We really haven't taken a position on that. I will say that we did talk today. We had our first discussion about the balance sheet, for example, and we went through the sequence of events regarding the runoff and that sort of thing with the balance sheet last time. And I think people thought that was an interesting discussion. They thought that it was informative, but people pointed out that this is a significantly different economic situation that we have at the current time, and that the differences that we see now would tend to influence how we think about the balance sheet. And the same thing would be true about raising rates. I don't foresee that there would be that kind of very extended wait at this time. The economy is so much stronger. I was here at the Fed when we lifted off the last time, and the economy is so much stronger now, so much closer to full employment. Inflation is running well above target, and growth is well above potential. There wouldn't be the need for that kind of long delay. Having said that, we'll make this decision in coming meetings, and it's not a decision that the committee has really focused on yet.
Let's go to Nick at the Wall Street Journal.
Thank you. Nick Tamaros at the Wall Street Journal. Chair Powell, in March, you answered a question about maximum employment like this. You said 4% would be a nice unemployment rate to get to, but it'll take more than that to get to maximum employment. More recently, you have hinted at a possible distinction between the level of maximum employment that's achievable in the short run versus in the long run. Has your view of the level of maximum employment changed this year, and if so, how? And how close is the economy right now to your judgment of the short run level of maximum employment? Thank you.
Right. So the thing is, we're not going back to the same economy we had in February of 2020, and I think early on the sense was that's where we were headed. The post-pandemic labor market and the economy in general will be different, and the maximum level of employment that's consistent with price stability evolves over time within a business cycle and over a longer period, in part reflecting evolution of the factors that affect labor supply, including those related to the pandemic. So I would say, look, we're at 4.2% now, and the unemployment rate has been dropping very quickly. So we're already in the vicinity of 4%. The way in which the important metric that has been disappointing really has been labor force participation, of course, where we had widely thought, I had certainly thought that last fall, as unemployment insurance ran off, as vaccinations increased, as schools reopened, that we would see a significant surge, if you will, or at least a surge in participation. So we've begun to see some improvement. We were certainly welcome the 0.2 improvement that we got in the November report, but I do think that it feels likely now that the return to higher participation is going to take longer. And in fact, that's been the pattern in past cycles, that labor force participation has tended to recover in the wake of a strong recovery in unemployment, which is what we're getting right now. So it could well have been that this cycle was different because of the short nature of it and the very strong, the number of job openings, for example. You would have thought that would have pulled people back in, but really It's the pandemic, it's a range of factors, but the reality is we don't have a strong labor force participation recovery yet, and we may not have it for some time. At the same time, we have to make policy now, and inflation is well above target. So this is something we need to take into account.
If I could follow up, you've talked recently about risk management, and so does that mean that the committee might feel compelled to raise interest rates before you're convinced that you've achieved the employment test in your forward guidance?
So this is not at all a decision that the committee has made, but you're really asking a question about how our framework works. And yes, there's a provision, what used to be called the balanced approach provision, that says in effect that in situations in which the pursuit of the maximum employment goal and the price stability goal are not complementary, we have to take account of the distance from the goal and the speed at which we're approaching it. And so that is in effect an off-ramp which could, in concept, be taken, and it's in our framework. It's been in our framework a long time. I've talked about it on a number of occasions. It is a provision that would enable us to, in this case, high inflation, move before achieving maximum employment. Now, as I said, we're making rapid progress toward maximum employment in my thinking, in my opinion, and I don't at all know that we'll have to invoke that paragraph. But just as a factual matter, that is part of our framework and has been really for a very long time.
Thank you.
Thanks. We'll go to Howard at Reuters.
Thanks, as usual. So I guess I got to ask about the elephant in the room, which is the Omicron variant. This seems to already be pushing one of your colleagues, the Bank of England, off its course. Things have evolved very fast there. Hasn't quite hit the shores of the U.S. in full force yet, but people seem to expect it to. So I'm wondering, in your feelings about this, are you convinced that this is going to be perhaps a more infectious but less serious variant of the virus, or are you simply confident that the U.S. economy can continue its divorce from the pandemic?
Well, I think there's a lot of uncertainty, which is why we called it out in our statement, our post-meeting statement, as a risk. We follow the same experts, and we talk privately to the same experts that everyone else does, and read the same articles in the paper and the same research. And so you mentioned the early assessment is highly transmissible, perhaps not as severe, some continuing protection from existing vaccines and also existing immunity from having had the disease. That's a first draft. We're a long way from knowing what it will turn out to be. It may well come to the United States and replace Delta as the dominant variant fairly quickly. That could easily happen. I think there's another step there, though, which is what's going to be the effect on the economy, and that will depend, on how much it suppresses demand as opposed to suppressing supply. It is not clear how big the effects would be on either inflation or growth or hiring. On top of what's already going on, which is quite a strong, wave of Delta that's hitting large parts of the country across the northern United States and all the way to the eastern seaboard, and now coming down. We're having quite a wave of Delta. So coming in on top of that, again, it's very difficult to say what the economic effects would be. I do think wave upon wave, people are learning to live with this. More and more people are getting vaccinated. So people who get the new variant, it affects them much less than it tends to affect in the aggregate people who are not vaccinated. So the more people get vaccinated, the less the economic effect. It won't have an economic effect. Delta had an effect of slowing down hiring, and it actually it had an effect on global supply chains, and that sort of that hurt the process of the global supply chains getting worked out. So it can have an economic effect. I just think at this point we don't know much. We'll know a whole lot more in 3 weeks, and we'll know more than that in 6 weeks.
But if I could follow up, you're clearly from a risk standpoint comfortable putting away one of your tools pretty soon, which sort of implies that whatever Omicron brings, you're comfortable the economy can handle it without quantitative easing.
Yes. I think if you look at the state of the economy and the strength of demand, the strength of just overall demand, the strength of demand for labor. Look at inflation, look at wages. I think moving forward the end of our taper by a few months is really an appropriate thing to do, and I think really Omicron doesn't really have much to do with that.
Thank you.
Let's go to Gina at the New York Times.
Hey, Chair Powell. Thanks for taking our questions. I wonder if you could talk a little bit about what prompted your recent pivot toward greater wariness around inflation.
Sure. So I guess I would go back and, it's been a continual process, really. Inflation really popped up right in the late spring last year, and we had a view. It was very, very widely held in the forecasting community that this would be temporary, quite narrow. A limited number of factors were causing it, and there was a decent amount of evidence to support that view that it would be temporary or transitory, as we said. Certainly, we had 5 months of declining month-on-month, monthly readings of inflation, but we didn't see much in the way of progress on labor supply or on other supply side issues. Then in September, I'd say after Labor Day, we started to see, it started to become clear that this was both larger in its effect on inflation and more persistent. And of course, I said so on many occasions. And one of the consequences of that is that we moved the taper forward. We moved the taper forward, and it's a much faster taper than had been planned. So we've been adapting. I've been saying we're adapting our policy. So come to your real question. We got the ECI reading on the eve of the November meeting. It was the Friday before the November meeting, and it was very high, 5.7% reading for the employment compensation index for the third quarter, not annualized, for the third quarter, just before the meeting. And I thought for a second there whether we should increase our taper. Decided to go ahead with what we had socialized. Then right after that, we got the next Friday after the meeting, 2 days after the meeting, we got a very strong employment report and revisions to prior readings and no increase in labor supply. And the Friday after that, we got the CPI, which was a very high reading. And I honestly, at that point, really decided that I thought we needed to look at speeding up the taper, and we went to work on that. So that's really what happened. It was essentially higher inflation and faster, turns out much faster progress in the labor market. Really what's happening is the unemployment rate is seems to be catching up with a lot of the other readings of a tight labor market, 0.6 over one cycle. So that's really what happened. And widely supported in the committee today, as you can see, unanimous vote. But beyond that, I think widely supported this move.
If I could just follow up quickly, you noted that the ECI was one of the things that made you nervous, but you also said earlier that you don't see signs that wages are actually factoring into inflation yet. And I guess I wonder how you think about sort of the wage picture as you're making these assessments.
Right. So, but I said that you quoted me correctly. It's so far we don't see wages are not a big part of the high inflation story that we're seeing. As you look forward, let's assume that the goods economy does sort itself out and supply chains get working again, and maybe there's a rebalancing back to services and all that kind of thing. What that leaves behind is the other things that can lead to persistent inflation. In particular, we don't see this yet, but if you had something where real wages were persistently above productivity growth, that puts upward pressure on firms, and they raise prices. It would take something that was persistent and material for that to happen, and we don't see that yet. But with the kind of hot labor market readings, wages we're seeing, it's something that we're watching. And the other thing, of course, is rents, which are very important. Owners equivalent rent and rent. That's another thing which is very economically sensitive. Unlike the things that are causing the inflation now, this is economically sensitive, and so would be expected to move up. And so as some things go down, the question is, where will we be when we come out the other side of this? And we need to keep our eyes on those things.
Thank you.
Thanks. We'll go to Chris at the AP.
Thank you. Well, next year you could see growth slowing, and you could see some disinflation, particularly if the Omicron variant does spread more widely. Would you delay rate hikes in that situation, and how would you think about that? And also, how would you explain rate hikes if you do follow through in that kind of situation with inflation fading and growth slowing? How would you explain rate hikes to the public, particularly those who may still be looking for work?
Well, as you know, the SEP is not a plan. It's not something we debate, negotiate over, or really discuss in terms of what the right answer should be. People write down their assumption, their assessment of appropriate policy based on their economic forecast. And so the median, what you're talking about, the 3 rate increases, that's the median of the committee. The median of the committee is also that growth will be 4%, and then unemployment will be 3.5% by the end of the year. So that's a really strong economy. And of course, if the economy turns out to be quite different from that, then so will the rate. No one will say, oh, we can't change our policy because we wrote something down in December. That no one's ever said that or will. It will. The actual rate decisions we make will depend on our evolving assessment of the forecast. So, for example, if the economy were to slow down significantly, then you would expect that would have an effect of slowing down rate increases. But we have to, we look at our 2 goals, maximum employment and price stability, and we make policy based on them, and not with respect to what we wrote down in a prior SEP.
Thank you. Let's go to Victoria Guida at Politico.
Hi, Chair Powell. I wanted to follow up on maximum employment. So, the new framework was basically designed, as I understand it, so that there was a de-emphasis on guessing where inflation would pick up because of employment. And basically, you were going to wait until you saw the whites of the eyes of inflation, and that's how you would kind of know that you reached maximum employment. So I'm wondering, you've talked a lot about the different ways that you might measure maximum employment, but from what I understand, and that's still basically the way that you know that you're there, is inflation. So is that understanding correct? And are those signals likely to be clear right now, given that you have inflation that's caused by these supply chain disruptions that might also lead to inflation in wages and those sorts of things? So how do you sort of tease out the signal of
So let me start by saying that the inflation that we got was not at all the inflation we were looking for or talking about in the framework. It really was a completely different thing. It was to do with strong monetary policy and fiscal stimulus into an economy that was recovering rapidly, and in which there were these supply side barriers which effectively led to certain parts of the economy of what you might call a vertical supply curve. So automobile purchases are very interest rate sensitive, and you would think demand would drive up the quantity of cars, but it can't because they don't have semiconductors. So that was a very different kind of inflation. This is not the inflation we were looking for under our framework at all. It's nothing to do with our framework, and the way we've approached it is really nothing to do with our framework. But come to maximum employment, which is really your question. How do you know? So I think you look at it at prices and quantities. If you want to look at maximum employment, you look at prices and quantities, and the main price you look at is wages. It's one of the things you look at, and it's so I mentioned a number of the things. You can get to 20 if you wanted to easily, but labor force participation, the unemployment rate, different age groups. So prime age labor force participation in particular gets a lot of focus. The JOLTS data get a lot of focus, and wages. That's really one of the great signals. The quits rate is another one. The quits rate is really one of the very best indicators, according to a lot of labor economists.
İndikatör diyor. Demek ki düşecek. Vallahi düşmüyor ha.
Historically high levels of that going on, suggesting again that you've got a very tight labor market. So on wages, that's the price indicator we look at to tell us, along with all the other data, whether we have labor market conditions that are consistent with maximum employment. And so that's how we think about it. But one of the complications is that, again, we've got to make policy in real time. So how do we think about that? If we think we can make labor participation might move up. If let's say we knew that it would start to move up in 2 years, would we wait 2 years or when inflation is running way above target? Probably not. So you have to make an assessment that what is the level of maximum employment that is consistent with price stability in real time is one way to think about it.
Just to kind of follow up on that for a second, if you do raise interest rates next year and, you're not certain whether you're at maximum employment, and are you all going to point, when you raise interest rates, are you going to point to ways in which the labor market could
Vallahi bu trendi kırıyor arkadaşlar.
Yes, I mean, absolutely. I think, well,
Bak.
whether or not we say we're at labor market conditions consistent with maximum employment next year, we would all be open and I think expect over time that the level of maximum employment that's consistent with price stability would increase further over time, for example, through increasing participation. So we would certainly, we would not in any way want to foreclose the idea that the labor market can get even better. But again, with inflation as high as it is, we have to make policy in real time. We've got to make that assessment in real time.
Thank you. We'll go to Olivia from Bloomberg.
Thank you. Good afternoon, Chair Powell, and thank you for taking our questions. I wanted to follow up on some of your earlier comments about labor force participation. And I wondered, what do you think needs to change in the economy to kind of get a meaningful recovery in labor force participation? And also whether running the economy hot, like in the last expansion, is one way of doing that.
Well, the labor market is, by so many measures, hotter than it ever ran in the last expansion. If you think about it, the ratio of job openings, for example, to vacancies is at all-time highs. Quits, the wages, all those things are even hotter. But what would it take for labor force participation to move up more? That's really, why is it low is the question. So there are a bunch of answers, and all of them probably have some validity. Part of it will be that people, for certain people, they don't want to go back in the labor force because either they're medically vulnerable or they're not comfortable going back while COVID is still everywhere. That's one thing. The lack of availability of childcare.
Evet, Bitcoin gidiyor.
Is certainly part of it, not just for children, but for older people. It has been pointed out by many that the stock market is high, people's portfolios are stronger. They may go back to being a one-income rather than a two-income family. The same thing with people's houses. People they have a mortgage and with leverage, and the house price increases, the equity they have in their home might have doubled, and they might reach the same conclusion. So and people have savings on their balance sheet.
Vay amına koyayım, hepsi yükseliyor.
Because they couldn't spend on travel and things like that, and also because of government transfers. So for all of those reasons, and it's hard to know exactly the part each of them plays, we have a situation where we've had a shock to labor force participation that is not unwinding as quickly as many has expected. And people, in effect, a good part of it is voluntary. People, and this is how they want to maximize their welfare, and that's certainly their choice. In other cases, it's something that will abate very quickly if and when the pandemic gets under control. And the longer the pandemic goes on, maybe the less likely that people will come back because they get used to their new life and they lose contact with their old jobs. That's what the evidence would say. So it's a range of things. It isn't that the economy lacks stimulus. Usually in every other expansion, it's that there aren't enough jobs and people can't find jobs, and we're stimulating demand and trying to get demand to come up. That's not the problem here. The problem is a supply side problem, which what it would take to work it out, I think it's going to be time. And number one thing would really be to have the pandemic get under control. That's what everyone would really like to see. What does the labor market look like
Bitcoin gidiyor abi.
without COVID? That would be the thing that we'd really like to see. But it doesn't look like that's coming anytime soon.
And just to quickly follow up on that, if some of the reason that labor force participation isn't back to, February 2020 levels because people are
Gidiyor. Batıyoruz.
making life decisions that are different, does that make you think we're going to end up at a lower rate overall?
Well, there's a demographic trend underlying all of this. And we actually got above the demographic trend at the end of the last expansion. So one would expect over time that labor force participation would move down because an aging population, the older people are, the lower their participation rate is. So you would expect that the trend would be lower and that over time participation would move down. The question of how much we can get back up closer to where we were in February of 2020 and indeed for the year or so before that is a good one. And I mean, what we can do is try to create the conditions. There's a lot of good for society when you have a tight but stable labor market where people are coming in, they're getting in the labor force, they're getting paid well. In a labor market we had before, we had the biggest wage increases were going to people at the bottom end of the wage spectrum for the last couple of years. There were just a lot of really desirable aspects of a labor market like that. Higher participation is one of them, and we'd love to get back there. But again, ultimately, we have the tools that we have, which are essentially to stimulate demand and also to control inflation. I mean, really, it might be one of the two big threats to getting back to maximum employment is actually high inflation. Because to get back to where we were, the evidence grows that it's going to take some time. And what we need is another long expansion, like the ones we've been having over the last 40 years. We've had, I think, 3 of the 4 longest in our
Geri dönüşü yok abi bunların.
including the last one, which was the longest in our recorded history.
Baksana gidiyorlar.
To get back to the kind of labor market we'd like to see, and to have that happen, we need to make sure that we maintain price stability.
Okay, let's go to Edward Lawrence at Fox.
Kaldı böyle.
Thanks, Michelle, and thanks for taking the question, Chair Powell. So I was looking at the census data for estimated monthly changes on sales, and what you're seeing is fewer people spending at restaurants and drinking places, more people spending at grocery stores. You see electronic sales down 4.6% month over month. Also, department store sales down 5.4% month over month. How concerned, or what is your level of concern the consumer may be turning away from this economy or pulling back because of inflation, the virus, or something else? Thank you.
We see consumer expenses very strong in this quarter. I don't know, Edward, whether you're talking about more shopping online versus shopping in the store, but consumer demand is very strong. Incomes are very strong. Because people are going back to work and they're getting wage increases. Admittedly, some of the wage increases is being eaten away by inflation, but nonetheless, incomes overall are going up really significantly because of increased employment, and spending has been strong. There may be something in the seasonality that this year's holiday spending may have been pulled forward, and of course there may be effects from Delta, and there might be going forward from Omicron. But fundamentally, the consumer is really healthy.
Düşmüyor abi. Aksine yükseliyor.
To be pretty strong in the fourth quarter.
Aksine yükseliyor. Ama yani hani buradan alıp tak diye de indiriyoruz.
The median forecast for inflation in this month's
Yükseliyorlar abi, durmak yok.
economic projections has been revised up significantly for 2021, but barely moved for 2022 and 2023. You've said you expect inflation to fall significantly. Is that because you're going to raise interest rates, or because the virus is going to fade and the effects are going to fade? In other words, is it a question of when, not if, you raise interest rates? And does it suggest that maybe your critics are correct and you might be afraid you're behind the curve?
Actually, I'm looking at the SEP here, and the median forecasts for core and headline inflation did move up by 0.4 each. So that's a significant, in an SEP, that's a pretty significant move up. It's based on both of those things, I suppose. I do think there's a broad expectation among forecasters, including our own, that the bottlenecks will alleviate sometime over the course of this year. If you look at where blue chip forecasts are, which is a group of well-resourced large forecasting operations with a long track record, they'll show inflation coming back down would say though as well that our policy should begin to have an effect. There will be a lag, but it should begin to have an effect on that as well. That's the most likely case. I guess what the thing I would want to say though is we can't act as though that's a certainty, and we're not going to act as though that's a certainty. There's a real risk now, I believe, that inflation may be more persistent, and that may be putting inflation expectations under pressure, and that the risk of higher inflation becoming entrenched has increased. It's certainly increased. I don't think it's high at this moment, but I think it's increased, and I think that's part of the reason
Bir coinler hiç artmamış ya.
is to put ourselves in a position to be able to deal with that risk. And I think we are in a position to deal with that risk. We need to see more data. We need to see how the inflation data and all the data evolve in coming months. But we are prepared to use our tools to make sure that higher inflation doesn't get entrenched. For one reason, as I just mentioned, it's one of the two big threats, the other being the pandemic itself, to getting back to maximum employment.
Let's go to Michael Derby, the Wall Street Journal.
Thank you for taking my question. So as the Fed shifts towards an accelerated taper, I wonder what your read is on financial stability risks right now. I mean, these periods can be, it seems like the taper process has gone fairly smooth so far, but what do you see in terms of stability risks? Are there any parts of the financial sector that concern you right now? And are there any significant systemic issues that are on your radar, maybe from the cryptocurrency sector or something like that?
We have had now for a decade and more a four-part financial stability framework that we use so we can hold ourselves to the same kind of framework and not just treat each event individually. And there are four key areas: asset valuations, debt owed by households and businesses, funding risk, and leverage among financial institutions.
Hiç düşmemiş ki baksana.
Asset valuations, I'm going to go really superficially here, but asset valuations are somewhat elevated, I would say. Debt owed by businesses,
Nedir oğlum ya?
and households.
Biz işleme girdik, bu buradan uçtu gitti amına koyayım ya.
Businesses actually have a lot of debt, but their default rates are very, very
Baksana gidiyor abi daha da.
But nonetheless, it's something we're watching. Funding risk is by and large low among financial institutions, but we do see.
Bu hiç durmuyor baksana abi. Vay amına koyayım ya. Nedir ya?
The SEC's action this week. Leverage among financial institutions is low in the sense that capital is high. So overall, financial stability. That's how I would make an overall characteristic, but we break it down into those pieces. In terms of the things that we're looking at, it's the things we've already talked about to some extent. It's the emergence of a new variant.
En çok yükselen coin'i almışız amına koyayım.
That could lead to significant economic. If there were to be a variant, for example, that were quite resistant to vaccines, it could have another significant effect on the economy. We don't see that. We don't have any basis for thinking that the new variant that we have is that one, but it's certainly one we're looking at. I would say, cyber risk, the risk of a successful cyber attack is for me, always the most, one that we would be very difficult to deal with. I think we know how to deal with bad loans and things like that. I think more a cyber attack that were to take down a major financial institution or financial market utility would be a really significant financial stability risk that we haven't actually faced yet. So I could go on with a list of horribles, but I think that's a decent picture of where I would start.
How about the cryptocurrency issue? Anything that worries you there that's going on in there in terms of, there's obviously a lot's happening in that sector. Is that concern you at all?
I think the concerns there are not so much current financial stability concerns. I, of course, would support the views expressed in the President's Working Group report on stablecoins. Stablecoins can certainly be a useful, efficient, consumer-serving part of the financial system if they're properly regulated, and right now they aren't, and they have the potential to scale, particularly if they were to be associated with one of the very large tech networks that exist, and you could have a payment network that was immediately systemically important, close to immediately systemically important, that didn't have appropriate regulation and protections. The public relies on the government and the Fed in particular to make sure that the payment system is safe and reliable, as well as the dollar, and to provide a safe and reliable, trusted currency. So, but I do think those are longer term. In terms of the more the cryptocurrencies, that are really speculative assets, I don't see them as a financial stability concern at the moment. I do think they are risky. They're not backed by anything, and I think there are big consumer issues for consumers who may or may not understand what they're getting, and there's certainly developments in the markets that are worth following, which are really not in our jurisdiction, but things like the kind of leverage that's built into them and those sorts of things is certainly worth watching.
Let's go to Nancy Marshall-Genzer at Marketplace.
Chair Powell. Hi, Chair Powell. Thanks for the question. Going back to inflation, is the Fed behind it for getting inflation under control?
So, I would say this. I actually think we are well positioned to deal with what's coming, with the range of plausible outcomes that can come. I do, and I think if you look at how we got here, I do think we've been adapting to the incoming data really all the way along, and noticing and calling out that both the effects and the persistence of inflation, of bottlenecks and labor shortages and things like that. So we've been calling out the fact that those were becoming longer and more persistent and larger. And now we're in a position where we're ending our taper within the next, by March, in 2 meetings, and we'll be in a position to raise interest rates as and when we think it's appropriate, and we will, to the extent that's appropriate. At the same time, we're going to be seeing a few more months of data. I don't actually think we're out of position now. I think this was an important move for us to make. I think that the data that we got toward the end of the fall was a really strong signal that inflation is more persistent and higher, and that the risk of it remaining higher for longer has grown. And I think we're reacting to that now, and we'll continue to adapt our policy. So I wouldn't look at it that we're behind the curve. I would look at it that we're actually in position now to take the steps that we'll need to take, in a thoughtful manner to address all of the issues, including that of too high inflation.
Let's go to Evan at Market News.
Hi, Chair Powell. Thank you. I was wondering if we should still be seeing the taper and interest rate hikes as separate. And secondly, in the last cycle, the Fed started shrinking the balance sheet when short-term interest rates were about 1 to 1.25% range. Do you think the FOMC might be able to potentially start running off assets before that this time?
Are they separate? So our interest rate, they are separate tools. So that the asset purchases are a separate tool from interest rates. Stopping asset purchases does not remove accommodation. Whereas raising interest rates starts to remove accommodation from what is a highly accommodative stance. The extent to which they'll be separated in time is something we haven't really discussed at the committee yet. We will be discussing that obviously in coming meetings. I don't think that the last cycle there was quite a long separation before interest rates. I don't think that's at all likely in this cycle. We're in a very, very different place with high inflation, strong growth, a really strong economy. That as I mentioned, the SEP medians are for 4% growth next year, 3.5% unemployment at the end of the year, and the headline inflation of 2.6% next year, core at 2.7. So this is a strong economy, and one in which it's appropriate for interest rate hikes. So they're separate, I would say. Your second question was?
My second question was about runoff.
Runoff.
In the last cycle.
So with the balance sheet, we did have a balance sheet discussion. It's our sort of first discussion of balance sheet issues today, at our meeting this week. We'll have another at the next meeting and another at the meeting after that. I suspect these are interesting issues to discuss. Didn't make any decisions today. We looked back at what happened in the last cycle, and people thought that was interesting and informative. And but to one degree or another, people noted that this is just a different situation, and those differences should inform the decisions we make about the balance sheet this time. So I haven't made any decisions at all about when runoff would start, but we'll be continuing to, in relation to when either liftoff happens or the end of the taper. But those are exactly the decisions we'll be turning to in coming meetings.
Thank you. We'll go to Scott Horsley at NPR.
Thanks, Mr. Chairman. I think you said a few minutes ago that the inflation that we got during the pandemic was not the inflation that you anticipated when you crafted the framework, and you described it as a collision of a lot of monetary and fiscal stimulus with these.
Kimse izlemiyor değil mi? Battık abi. Düşmüyor baksana, gidiyor. Düşmüyor amına koyayım. Daha buradayız. Verir mi? Vermiş abi de, yani nasıl bir yükselişler amına koyayım ya. Hala gidiyor. Rekoru da kırmış. Geri gelmiyorlardı. Abi bu hep gidiyor bak. Hiç durmuyor amına koyayım. Yok abi bu gider ya. Düşmüyor baksana. Gidiyor. Bak. Bu gidiyor abi. Gidiyor, hiç acıması yok. Sözde düşecek dedik. Aman kodumun şeyi ya. Hı. Yok abi gidiyorlar bunlar ya. TR ne? USD TR. Takılıyor bu burada. Kanka bunun düşeceği yok ya. Vay amına koyayım. Geçmiş olsun. Öyle bir düşmesi lazım ki diğer coinler düşsün amına koyayım. Yoksa diğerleri pump'ı yerler artık yani. Hepsi sırayla yer amına koyayım. Bak %10 yükselen var, %20 yükselen var, %40 yükselen var. Anladın mı? Giderler. olumlu haberler de geldi. Şurada bir ring var abi. Şu ringi kırdı, anladın mı burada? Burada ringi kırdı. Yani beklenen ringden aşağı inmesiydi. İnmedi. Yukarıya ivme kazandı. Değil'i bakarsak yani henüz daha çok büyük bir hareket mi? Değil'e baktığımızda. Yani her şey uygun gibi aslında. Bundan sonra aşağı inmesi gerekiyor. Evet. Bir saatte bayağı yükseldi. Hala devam ediyor. Kripto Abdullah'ın video sonu buraya kadarmış. Evet, bir aşağı bir şey bekliyoruz abi. Yok ama hani aşağıya yok. Yukarı diyor. Ben buradan kırar giderim de diyor belki de. Anladın mı? Belki de kırar gider yani. Ama bu kadar indirmişken ve şunu vermişken yani hala daha düşen trendde tabii de. Ama abi diğerleri siklemez düşen trend falan. Giderler bak. Kırmış zaten amına koyayım. Baksana gidiyor abi. Tehlikeli bu ya. Buradan düşmezse çok tehlikeli abi. Yani tabii trendi kırdığında düşüyor mu? Geri düşüyor abi. Baksana. Ama gider bayağı yani hani. 105 falan oldu bile amına koyayım. Yok yani. Geçmiş olsun. Baksana. Yani bunları buradan aşağı indirmezse geçmiş olsun abi. Ya bu fake olabilir bir tane. Ama yok yani gidiyor hepsi. Uçan kaçana. Bundan sonrasına geçmiş olsun yani, anladın mı? Evet arkadaşlar, artık gidiyor bu. Belli. Yani yine verir böyle de yani vermiş yani geçmişten abi. Neler vermişti. Ama vermiyor. Yükselmeye devam. Hala yükselmeye devam ediyor. Kripto boycular. Evet 49.500'e kadar geldi. Evet düşüş vermedi abi. Kana geliyor. Bana koyayım ya. Kara cuma oldu bizim için. Neyse kapatayım yayını ya. Düşünmeyecek bu abi. 49.400. Hepsi yüksekte.